Hello and welcome into the KE Report. Chad and Corey here as your host, and today we are getting an update on Mako Mining. Mako Mining is traded on the TSX.V under the ticker MKO and on the OTCQX under the ticker MAKOF. And we're joined today with the president and CEO of Mako, Akiba Leisman. And Akiba, it's great to get you back on the show as always to get a holistic update here on all three projects. Just for people listening in, as a reminder, the company has producing operations in Nicaragua at their San Albino assets. They have mining kicking off and starting to commence at the Moss Mine in Arizona. And then they also have their development stage Eagle Mountain project in Guyana. So a lot going on with the company. Let's kick it off with the Q2 operations and a quick financial look at the company, Akiba. A lot of highlights here, but what we can say is that you had a record gold revenue quarter in Q2 of this year. Obviously, higher prices factor into that, and an increase in cash. So, give us some of the key takeaways from the Q2 operations and a financial update on how things are going in Nicaragua.
And thanks for having me on, Chad. Yeah, I would say Q2, stripping aside like the macro factors like gold price and everything along those lines, I thought the operations were exactly what they should be when San Albino is kind of running on rails. Like in Q4 of last year, for instance, we were in a particularly high grade part of the ore body that spiked some of our head grades, and in Q1 we were even a little bit strong. Q2, I would say that's what San Albino like should do in a normal quarter. Now, obviously, this is the type of mine that there's going to be a lot of variability quarter to quarter, but I would view Q2 to be this is what the mine was designed to do, running at 20% above nameplate capacity at 600 tons per day. Now, the difference between Q2 and essentially all other quarters that we've ever had in our company's history is the fact that we were dealing with this with an average realized gold price of just over $3,320 an ounce. And you can see how that actually flows through in this particular case in terms of our highlights from the operating update, our cash flow. But you'll see when we report Q2 earnings in the third week of August, that this is going to be a pretty spectacular amount of not only revenue, but of profits that are generated from what is still a relatively small scale mine. So we sold over at San Albino right around 10,000 ounces of gold, and between that and Q1, it was just under 20,000 for the first half. Say H2 is going to be almost identical to that, although that's going to be weighted towards Q4, just in terms of where we are in the mine plan. Q3 was designed to be the weakest of the four quarters for the year, albeit with the intent here really is just to get to our third and fourth phases of mining to access some of the higher grade material that we have over the Las Conchitas deposit. Now, in terms of some of the highlights that I had over on the operating update, is that our cash balance for the quarter went up by over US $18 million just for the quarter, about 18.2 million from the end of Q1 to the end of Q2. Now, some of that was working capital adjustments. So you can't really multiply that number by four and expect free cash flow from this company just from San Albino coming in over US $70 million. But what you can take from this number is that even with a mine that is essentially producing right around 10,000 ounces a quarter, you can see what the cash flow generation of this thing actually is. I mean, just to put this in context of where we were when we first got into the to the meat of the Las Conchitas deposit about 2 years ago, it's that the market cap of the company was less than US $60 million. And here you have from one asset, one cash flowing asset before we went on the acquisition spree that we did in 2024, was generating in a single quarter close to 30% of your market cap over there. It's pretty extraordinary what the profitability of San Albino meant to a company as small as what we were. Now, in the ensuing 2 years since that time, we've now acquired two assets in an extremely accretive fashion. So the first one was the Eagle Mountain project via the acquisition of Gold Source that we completed in July of 2024. So almost exactly a year ago. And then, of course, the acquisition or the announcement of the acquisition of the Moss Mine in Arizona, which we're getting ready to restart on New Year's Eve of last year. So you're going to have two full mines by the end of this month with a development project that we aim to start construction next year.
So keep in terms of that cash component, as you said, added over 18 million in cash. What are the cash calls looking like for the rest of this year as you build out production? As you said, growing from one mine to two mine, but any other major increases in terms of spend that you'll have?
Well, I mean, essentially, when we acquired Moss, it required some capital to get everything fixed and refurbished, but it was still producing gold through a residual leach. So there effectively was no cash requirements to get the on the ground stuff ready for the restart of mining operations. Now there's a couple of caveats to that. Is that we hired a mining contractor, which is a little bit delayed right now. In fact, I got some word this morning that they're still having some issues getting some of their equipment from the Mexican-U.S. border. So hopefully that will get released later this week, so we can actually restart mining operations over the course of the next couple weeks. But there was a substantial prepayment on some of their mining that required some cash, but that's not even a capital cost. That's effectively a prepayment on some of the mining costs that we had from them. Additionally, at the beginning of the quarter, this is somewhat related to Moss, but we did make the acquisition of the residual senior secured claims over at the Elevation bankruptcy. We bought over $70 million of claims, although there's not going to be anywhere near $70 million of recovery associated with that for 1.8 million bucks in cash. Hopefully, there's going to be resolution of the litigation around two of our royalties that we have on the project, one owed to Patriot and one owed to Sandstorm, soon to be Royal Gold. And then hopefully, once that's resolved, the residual collateral that's backing those $70 million of claims will get released to the company. I'm expecting that to happen over the course of the next 2.5 to 3 months. But beyond that, this is like a mine that was ready to go, and gold prices above 3,300 are certainly going to mean that once we have breakthrough and we're starting to get like real levels of gold production out of the mine, which will happen relatively quickly, this is going to be cash flow positive essentially from the day we started. It actually has been cash flow positive since we acquired it, depending on how you look at it, either New Year's Eve last year or at the end of March of this year.
Yeah, Keeb, I think that when you highlighted the transaction that for basically under $2 million, once everything, all the credits and debits were applied, you had a cash flowing mine that was still having residual leaching. Now, just from the production profile, as you start ramping up Moss, what do you think is possible between the two mines, say by Q4 or I don't know, even by the end of Q3 here? What do you think is possible as you ramp up Moss for the overall production profile of the company between both areas, between Nicaragua and Arizona?
Yeah, so I mean, the interesting thing about Moss is that the life of mine average grade is going to be maybe just under 0.4 grams a ton, which sounds low. Actually, it is actually low, especially compared with San Albino. But this is a type of mine where it's a heap leach. You can't look at it in the same operational context as you do our mine in Nicaragua. So, for instance, the average head grades that we've been milling at San Albino since inception has been over 7 grams a ton. The average grade of the vein is 17 grams a ton. This is a different type of ore body. Now, a couple of things with that is that unlike San Albino, Moss does have sensitivity to the gold price. So the higher the gold price goes, the more material you're actually able to profitably mine. So there is sensitivity to head grades to the gold price. So head grades do go down when gold prices go up in terms of economic analysis for the mine, which is something inherently different about Moss versus San Albino. And then on top of that, and I've spoken about this a little bit with your listeners before, is that when Northern Vertex and Elevation were getting permits on Moss, they never got an environmental impact statement via the federal NEPA process approved, right? So this was initially built as a pilot plant in 2011 to 2013, exclusively on private ground, patented ground. And then they asked the federal government if they could avoid doing the NEPA process by only getting an environmental assessment approved on their asset, which was initially approved, I believe, in 2017 or 2018, which was exclusively on 493 acres of ground that they had over at site. And to put this in context, we have over 35,000 acres of concessions over at our company over in the Oatman district. So over time, in terms of decisions that Elevation and Northern Vertex made with respect to infrastructure placement. I've spoken about this. They actually built the plant on top of a pretty substantial part of their known resource. Leach pad placement, things of the sort. They were very tight with those 493 acres. And prior to the Trump administration, the way that they handled any adjustments to that is that they went to the BLM and they basically said, look, we're running out of space for where we're mining. We would like to have access to this contiguous part of our property so we can mine in this particular area. And then the BLM's response, which this happened to have been an office that was actually pretty responsive to mining companies, even under the Biden administration. But their response is there's no way that you're going to be getting an amendment without giving up some of your ground. So our Elevation always kept that 493 acre inventory of ground. And if they ever needed to make an amendment, which they did two of over the course of the last 6 or 7 years, they needed to give up some ground elsewhere. So it never alleviated any of the challenges with respect to the tightness of where they were on infrastructure. Now, we happen to be in the part of the mine where, and this actually is pretty obvious what happened is in the middle of bankruptcy. Elevation was trying to mine as much material as possible to get onto the pads, just to get as much cash flow as possible to keep the lights on. So there's elements of the mine plan that required a little bit of a pushback in order to access some of the higher grade material of the plan. So one of the things that we did when we first took over was we immediately went to the BLM to ask for one of these EA amendments, and initially thinking we would do the same thing that Elevation did, was apply for a land swap. And once we got that, we would have access to some of the higher grade material, so the zero point 0.4 plus type material that would be coming through our mine plan, with the understanding that we would be required to give up some of our ground as part of the not give up the ground, but give up part of our permitted area as part of this process. And it was the BLM, not us, but it was the BLM that suggested to us is that, you know what, this is a different administration. You don't need to do that anymore. So we are going through an EA amendment right now, but with the expectation that our permitted area is going to expand pretty significantly, maybe by a quarter or even as much as a third in terms of what we have access to. And that changes the entire nature of what the short and intermediate term mine plan of Moss is going to be. Now, we still actually require this permit, right? We're expecting to get that over the course of the next couple months. But assuming that we do get this, two pretty material things wind up happening. Number one, we're going to have access to some of that higher grade material. So if we're going to be getting up and running at, let's say, a 10,000 ton per day, short ton per day clip, those kind of grades and those kind of recoveries, once everything is ramped up, and there's still going to be like a 5 or 6 month ramp up period that's required because this is a heap leach and the pads do need to be recharged, that will equate to a roughly 40,000 ounce a year equivalent runway. And we're pretty confident that we're going to be able to get up to those levels in pretty short order. And then the second and potentially even more impactful thing is that a lot of these constraints that we had with infrastructure before, with the expectations that we were still going to be operating under the same constraints, if we get this permit, and we're pretty confident that we will, a lot of those constraints actually go away. So this actually could wind up surprising people about how long we can mine without making very material capital requirements, like moving leach pads, getting additional permits, moving the plants, which we definitely do not want to do because that's actually a big task, both capital and time. And then it gives us our most valuable asset, which is time, that if we can actually expand our mine plan to a level which doesn't require a lot of these changes, it gives us time to explore more of that 35,000 acres of ground where we're very, very confident that we're going to be making additional discoveries that are going to be as large, if not bigger, than what we have over at Moss right now.
So since you sounds like we'll have access to this higher grade material, do you need to change the mine plan? Do you need to change any of the public information that investors would see to validate all this that you're saying, the increased production, the ease of production as well?
Yeah, so the good thing is that we're in the process right now of redoing that resource, and there will be a pre-feasibility study that will get done with it. So we hired the Micon folks to help us out on that. That should be out by the end of October-ish, thereabouts. So we're pretty much done with getting our geological model set, which is the way that we go about geological modeling is different than most junior mining companies. Is that everything that we do is done explicitly, which requires a lot of hand-holding with respect to our geologists and external geologists in order to get done. But the same approach that we take with San Albino, we take with Moss. So everything needs to be geologically controlled, lithologically controlled, structurally controlled, where a lot of our compatriots basically put out a resource by basically just taking a couple of drill holes, seeing what the gold grade is, and then providing the market a blob of a little potato in terms of what the resource actually looks like. That's not how mining companies can mine. That is how a lot of resource companies can function as public companies, knowing that they can wind up mining the markets. But if you actually want to have some sort of mine plan that you can reconcile to reality, you do need to go through this hand-holding exercise. So that should be out by the end of October, in which case we'll have a full, pretty detailed mine plan to disclose to the market. And obviously, fingers crossed, before that happens, we'll hopefully have that EA amendment in hand, in which case we can be mining to that mine plan immediately. If for whatever reason there's a delay in those permits, we still would expect those permits to come at some point. But then obviously there'll be adjustments because we do need to have access to some of that material in order to get to that, let's call it the zero point 0.4 head grade. We do need to have access to some of that stuff on the north part of our permitted mining area.
Well, Akiba, we don't have time for a full-on exploration update at both properties, but you mentioned the exploration upside that you think there is around Moss, and obviously you're always exploring in Nicaragua, not just at around the San Albino mine and at Las Conchitas, but also some of the regional targets. Most notably, we've been talking about El Golfo and some of the work there. But just in a general sense, what can you say about all the exploration work that the team is doing? Because I still think of Mako as a hybrid company. Yes, you're producing and yes, you're operating, but you're also still making a lot of discoveries.
Yeah, absolutely. So San Albino, it's kind of interesting about the comparison between San Albino and Moss, is that there's a lot of similarities between the two assets in terms of production profile. Both are going to be thumb in the air, 40,000 ounce a year producers. Both of them are somewhat constrained for different reasons. From San Albino, it's geological complexity, and then for Moss, it's this infrastructure and permitting, and obviously the last 10 years of having a financially distressed company running the company that's been released since we acquired. So a lot of those constraints kind of led both of them to be relatively short mine life assets. Where the distinction between the two of them starts to break down, obviously, is in grade profile. Like San Albino is on the right tail of the grade spectrum of gold projects around the world, and then Moss is on the left tail of that bell curve and spectrum. But the other thing is that because you actually have nothing simple in mining, but certainly from a relative basis, the geology over at Moss is simpler than over at San Albino. So for an equivalent amount of drilling density, you would expect to be making much larger discoveries for Moss than you would over at San Albino. San Albino was, is, and will be a blocking and tackling type exploration program where Moss can, for very, very small amounts of exploration success, you can have material differences in terms of its potential mineral inventory. So the stuff that we're doing over at El Golfo is a good analog to that. So on our second hole of the program, which we released, we put out a pretty spectacular hole, close to 40 gram material over roughly 6 meters of estimated true width, with the expectation that we were going to follow up on those holes in and around the El Golfo area, both in terms of the immediate area that we're drilling a zone of El Golfo that we call Pavona, and then also significantly down dip, hundreds and hundreds of meters of down dip to an area that we call Potosi, also part of this El Golfo land package. So we will be putting out additional drill holes. So I would say within 2 weeks, we'll be putting out some of those drill holes and the follow-ups on El Golfo. And I think those drill holes are going to show that it was not a fluke that we wound up making a material. Let's not call it a discovery because we need more than two holes to classify a discovery. But certainly in terms of the quality of that hole, you'll see that there's more to come, which will have very, very similar profiles to what's already been released. So I would expect that to happen in the next couple weeks. And it just shows is that wherever we drill on this property, there's the potential to find a very similar material to what we've been mined before. But I would never have the expectation that any single hole would deliver a resource that's going to be 50, 100% of what we currently have. It's just not that type of a project. It's always going to be this blocking and tackling. So sexy results in terms of headlines, but in terms of what the impact that will be meaning to mine life, everything is going to be incremental over at San Albino. Moss will be functionally different in terms of what that exploration program will mean to the company.
Well, maybe when you get some of those results out, we'll just have you pop on and we'll just dig in deep to the exploration side of the business, both in San Albino and then eventually over at Moss in Arizona. But I think that there are some pretty splashy hits you've had at El Golfo. So excited to see what the follow-up will look like. So yeah, an expansion, but a little different on the orogenic gold system than it is and more of the traditional type of disseminated gold system in Arizona. But you have a third project here that we haven't even got to yet. So let's weave in Guyana and the Eagle Mountain Gold Project. I think one of the key work programs is around the environmental impact assessment, your EIA, but then doing a lot of geotechnical drilling and different things to kind of de-risk that and move that along in the permitting process. What can you say about what the timeline is and some of the key milestones on tap for Eagle Mountain?
Yeah, so from when we first announced the acquisition of Gold Source in February of last year, we consummated it in July of last year. We've been engaged in a hydrogeological and geotechnical drilling campaign, basically to make sure that we had the good quality information for some of the engineering choices that we're going to be making, both for the mine as well as for the waste dumps and tailings disposal facilities. So that drilling is done. It's incorporated in our internal engineering designs. And right now we're doing our trade-off analysis on how best to go about our let's call it first 3 or 4 year mine plan. So for your listeners who've been following Mako, the way that I describe Eagle Mountain is essentially two projects in one. The first one will be a saprolite only project. So here you have very easy to process material, and then let's call it in year 3 or 4, there's not going to be enough saprolite to run this as an only saprolite mine. So you're going to need to have additional units of power to go in and handle some of that hard rock material later on in the mine plan. We're fortunate that the hard rock actually has higher grade than the saprolite. So that's going to be helpful in terms of offsetting some of those additional power costs. So we're in the process right now of designing what the mine is going to look like for the first part of the mine plan when this is running as a saprolite only. And then coincidentally, the government announced an accelerated election season. So really, everybody is out of the office electioneering at this point. So that will happen on September 1st. And then immediately after that, when everybody gets in, there might be some adjustments into who the cabinet ministries are that are relevant in terms of our oversight. We're going to be basically finished with our plant layout and design to submit our EIA to the government pretty much on schedule, which is going to be in October, which they'll be fresh from the election season to review, and hopefully that will get done in pretty short order. That being said, is that Guyana has taken the approach that even without an EIA approved, they do submit and they do approve interim permits to start civil works, which will be helpful. That can happen. Our expectations is that will happen in Q2 of next year, but it is not outside the realm of possibility that we can have an interim. I don't expect the EIA to be approved in Q1, but to have an interim permit to actually start construction sometime in Q1 of next year. In which case, if we can get started on something like that, then yeah, we'll be producing gold over at Eagle Mountain as early 27.
Yeah, and you'd mentioned in our last conversation, and I recommend people go back and check that out. Some of the parallels that you saw with G Mining when they took over Reunion Gold and started moving it forward, how they were able to start some of the groundwork and some of the early commissioning of the build out, even while they were waiting on their EIA. So interesting that they give you that flexibility in country to be able to keep advancing the project. And yeah, hopefully that keeps the timeline moving forward, maybe even sooner than people are expecting there. And so if you could get into production by 2027, you'd essentially have three mines running by 2027. So you can see the growth profile of the company. As far as the upside there, could you just give people a reminder of what you think is possible from an annual production standpoint at Eagle Mountain when it's up and running?
Yeah, so the PEA that was put out at the beginning of 2024 showed a about a million ounces of gold recovered from 1.1 million ounce resource, all categories, which was a subset of a 1.8 million ounce resource, all categories that all reported to an economic pit. So the reason why the PEA was designed around that 1.1 was principally to show as high of an IRR as possible as part of that project. So a lot of the material that was left out, even though it was economic, even at 1850, were some of the areas that were kind of on the margin of the pit, which really wasn't all that incremental to IRR as part of that project, even though it would have been incremental to NPV. Now that you actually have a gold price that's in excess of $3,300 an ounce, there isn't a scenario where that additional 700,000 ounces doesn't come in to the model. I think that's probably going to be additive to mine life as opposed to changing the upfront scale from a production standpoint. Certainly in the first stage, and that's both in terms of Mako's capital constraints, is like at the end of the day, even though we generated $18 million of cash in Q2, we're still a relatively small company. So it's not like we can be building huge projects with our current financial capacity. But also, in terms of some of the engineering choices and the information that we have right now, I'm not sure we actually want to be building that much bigger of a footprint over at site right now. So I think this, let's call it 5,000, 6,000 ton per day type facility is kind of where you want it to be until we actually can do more work, and then we can make choices later on. So in terms of scale and upside, yeah, this is going to look like a mid 60,000 ounce a year producer, especially when it's in the early years of saprolite. It's pretty extraordinary about what kind of cash flows are going to be generated. Principally because as you can imagine, when you're doing your mine plan optimization, the higher grade stuff does report to the mine first. It doesn't take a rocket scientist to optimize a mine plan that way. So in terms of what the first couple of years looks like, when you're in saprolite only and you're going to be mining some of the higher grade parts of the saprolite, it's gonna surprise many people in terms of what the capabilities and the cash flow projections are going to be for Eagle Mountain. So hopefully we'll be in a position to submit our EIA, I guess, in about a little over 2 months from now. And then it's going to be in the hands of the government to approve that. But in the interim, making sure that we can get started as soon as they give us an interim permit to begin the civil works.
Well, then just summing everything up, when you look at all three jurisdictions, Nicaragua, Arizona, and Guyana, and you'll have really progress and key milestones happening at all three projects, not just through the end of this year, but also in the first and second quarter of next year. So lots of things on tap. What do you want to leave people with as far as a takeaway, as far as the Mako mining that's emerging today versus maybe Mako mining about a year and a half ago?
Yeah, I mean, at the end of the day, there's a lot of moving parts over the company, but it's not complicated in terms of what Mako is. So what Mako is you have two. At this point two, although one actually has to restart mining operations to be officially two mines, where both of them are going to generate not only enough cash to explore what are pretty robust organic growth opportunities at both assets, but there's going to be enough capital coming from both assets to essentially buttress what the project finance of Eagle Mountain is going to be, which is going to be this $100 million project that we're going to start needing to spend capital on that. Let's call it in late Q1 of next year, and then that capital burden on the project is getting smaller and smaller and smaller every day. So when you look at what our ability uh, to actually organically grow and basically use our two principal mining assets as this bootstrap strategy to build something a couple notches bigger than we've done in the past. It really just shows you putting a company together like this and doing it correctly and making sure you don't need to go back to the markets to finance your objectives. Albeit there likely will be a financial requirement to get to that $100 million level over at Eagle Mountain. But really, for the last now over 5 years, we've essentially funded everything that we needed to do internally. And this is a business objective that a lot of people talk about in the mining industry, but very, very few companies were able to execute on a strategy like this. And I hold our team's results up to anyone else out there, the industry, in terms of what we were able to accomplish over the last 6 years. And then the next 6 years, I think, are going to be looking even better because you're going to be able to basically enjoy the fruits of the labor in terms of putting this asset package together, like we have over the last 5 or 6 years.
Well, I think we'll wrap it up there for today, Akiba. But yeah, it's been a pleasure to follow along with the company since the early days when you were just starting to get the mining up and going in a bigger way in Nicaragua to both acquisitions and making all the discoveries around the land package beyond San Albino in Nicaragua and continuing to show that that's got a long life ahead of it. Even though it initially had such a short mine life, you've shown consistently that you can go find more mineralization really wherever you stick a drill rig, it seems like. And then there's so much exploration upside still beyond the known quantity of mineralization in Arizona. So excited to see you spread your wings a little bit over the next year or so there and starting to see the production that will be ramping up through the end of this year. But really, in the beginning of next year is going to be the big year for Arizona. So a lot going on with Mako Mining. And for those of you listening in, if you want to follow along with all this news, definitely click on the link down in the show notes. It takes you right over to the Mako Mining website, straight to their news section where you can sign up for updates and have them hit your email inbox, or just follow along with the news as it drops on the wires. Akiba, keep us posted, and yeah, once you get some more figures out from some of the exploration, let's get you back on and just do an exploration update. And as always, looking forward to our next conversation.
All right, great. All right. Thanks, Chad. Appreciate it.